Hello and welcome to GK by RK Hub. I am Ranganathan Kumar and I sincerely thank you for joining me today. In this video, we are going to discuss a very important and relevant topic for every bank customers in India. KYC, Know Your Customer, CKYC, Central KYC, a documents required for registration and the consequences of not completing your KYC CKYC on time. Before we begin, let me briefly introduce our channel. The inspiration behind our GK by RK Hub comes from the famous saying of the great Tamil poet Avaya. Katrathu kaimanalavu, kalladadu ulagalavu. It means what we learn is only handful and what we have not learned is as vast as the world. With this thought in mind, our motto is learn, share and grow together. This is our second video, and through this channel we bring you latest news and important updates, general knowledge topics, banking and financial awareness, competitive examination questions and answers, educational content in both English and Tamil. If you find our videos very useful and informative, please support us by liking, sharing and subscribing to the channel. Your encouragement motivates us to create more valuable content for you. Now, without any further delay, let us get started with today's topic, KYC and CKYC. What is KYC? What is CKYC? What is the difference between KYC and CKYC? What documents are required for KYC and CKYC? What are the consequences of not completing KYC or CKYC registration? In the next 10 minutes, you will get clear and simple answers to all these important questions. Be sure to watch the video till the very end, as we have explained several important points and practical tips that every bank customer should know. KYC and CKYC are essential registration processes for customers of banks and other financial institutions. Take a look at this interesting fact. According to the RBI Annual Report 2024-25, there are 286.9 crore bank accounts in India, while the country's population is only 146.39 crore. How is it possible for the number of bank accounts to be nearly twice the population? That's a good question. The answer is simple. Many individuals maintain more than one bank account with different banks. As a result, understanding the KYC and CKYC registration processes becomes extremely important. Through this presentation, our objective is to create awareness and help customers understand the significance of KYC and CKYC, especially those who are unfamiliar with these important procedures. An informed customer is better equipped to enjoy seamless banking services while safeguarding against fraud and regulatory issues. First, let us understand KYC. KYC stands for Know Your Customer. It's a mandatory registration and verification process used by banks and other financial institutions to verify a customer's identity, address, occupation or business, and financial profile. Why is KYC necessary? KYC helps banks and financial institutions verify the identity of their customers, understand the nature of customers' financial transactions, prevent identity fraud and financial crimes, combat money laundering and the financing of terrorism, comply with regulatory and legal requirements. In simple terms, KYC ensures that financial services are used only by genuine customers, making the banking system safer, more transparent and more secure for everyone. Now, we'll see documents required for KYC registration. To complete the KYC process, you need to submit copy of the following documents and produce originals for verification. First, proof of identity. Any one of the following: Aadhaar card or passport or voter ID card or driving license or NREGA job card, that is National Rural Employment Guarantee Act card. Next, for proof of address, any one of the following: Aadhaar card or passport or driving license or recent utility bill, that is electricity, water or gas bill issued within the last 2 to 3 months. Then bank passbook or registered rental or lease agreement. Then important one, PAN card. A copy of the PAN card is mandatory for most financial KYC registrations. Then one recent color passport size photograph, an active mobile number for OTP verification and future communication. An email address may be provided for receiving account related communications and alerts, while optional in many cases, providing an email address is recommended. What is CKYC? CKYC is Central KYC introduced by the Government of India to simplify the KYC process across all financial institutions. With CKYC, you need to complete your KYC only once. Your verified information is securely stored in the central repository maintained by the CER/SAI, the Central Registry of Securitization, Asset Reconstruction and Security Interest of India. After successful verification, you receive a unique 14-digit KYC identification number or KIN. Whenever you open a bank account, invest in a mutual fund, purchase insurance, or avail of other financial services, simply provide your KIN. Participating financial institution can securely access your verified KYC details, eliminating the need to submit the same documents repeatedly. CKYC saves time, reduces paperwork, prevents duplicate KYC records, and makes financial transactions faster, simpler, and more convenient. Complete your KYC once, use it everywhere. That is the power of central KYC. What documents are required for CKYC? First, submit a proof of identity such as your Aadhaar card, passport, voter ID, driving license, or NREGA job card. Next, provide a proof of address. In many cases, the same document can be served as both identity and address proof if it contains your current address. You will also need a recent passport size photograph, your PAN, and your mobile number and email ID for communication verification. If current address is different from the one on your identity proof, you may be asked to submit an additional valid address proof. Keep your original documents ready for verification to ensure a smooth and hassle-free CKYC registration process. Have you ever wondered why you are asked to submit your KYC documents again for CKYC, even though you have already completed KYC? Let us understand the difference. Traditional KYC or Know Your Customer is maintained separately by each bank or financial institution. This means if you open accounts with different banks, insurance companies, or mutual funds, you may have to submit your KYC documents to each one individually. CKYC or Central KYC is different. It creates one centralized KYC record for every customer. Your verified details are securely stored in a central repository maintained by CER/SAI. Once registered, you receive a unique 14-digit KYC identification number or KIN, which can be used across participating financial institutions. So, if you have completed only the traditional KYC earlier, your documents may need to be submitted one final time for CKYC registration. After that, your CKYC record can be accessed using your KIN, eliminating repeated KYC submissions in the future. One-time registration for lifelong convenience. This is the biggest advantage of CKYC. Why is it important to complete or update your KYC and CKYC? Ignoring KYC or CKYC can lead to unnecessary difficulties in accessing financial services. Banks, mutual funds, insurance companies, and other regulated financial institutions are required to comply with Know Your Customer guidelines. If your KYC or CKYC is incomplete, outdated, or not updated when requested, your account may face restrictions. You may not be able to open new accounts, invest in mutual funds, purchase insurance products, or carry out certain financial transactions. Existing investments or accounts may also be placed on hold until the required KYC formalities are completed. Delays in processing loans, claims, or other financial services may also occur. Keeping your KYC and CKYC updated helps protect you against identity fraud, ensures compliance with regulatory requirements, and enables uninterrupted access to financial services. Dear viewers, thank you so much for watching this video and for your continued interest and support. Your encouragement inspires me to create more informative and useful content for you. If you found this video helpful, press like button and share it with your family and friends, and subscribe to the channel. Don't forget to click the bell icon so you will never miss our upcoming videos. Thank you once again for being a part of our growing GK by RK family. See you in the next video with another interesting topic. Until then, take care, stay informed. Bye bye.